Our topic today is on purpose-driven investment in the digital age. This topic was inspired by an article in Harvard Business Review called The Investor Revolution. We're finding that capital markets are in a sea change. They're undergoing rapid transformation in terms of the emphasis from being merely profit-driven to being purpose-driven, particularly with the emphasis on ESG, environmental, social, and governance issues.
Yeah.
Florian.
Isn't that the world millennials and their quest for purpose essentially stimulated through connectivity? So we're in the fourth industrial revolution, and that puts at perish democracies, that puts at risk old business models, the silos of the old industries, car industry, energy, all is getting blurred by the new business models, but at the same time also people, you see that in the media, you see that in uprise, so people have an opinion because now they get information, right or wrong.
Right.
And if you have that on the side of, let's say, wanting to make a difference, so I have to do something about it, and that potentializes the quest for purpose, which actually we believe is a good thing. So you can move from a pure profit model into a capital as a force for good. But it also changes the old model of I pile money and I give money back, and ideally free aid, philanthropy. All of that is changing now, where it's a very interesting movement of how business models are perceived and how digital, data-driven companies and the people behind actually are thinking about what to do about or do with it. And I think it's a historical moment.
It is a historic moment. Like you said, the connectivity is at the crux of all of this, with the information propagating and people's ideas being able to take root and take hold of society.
I mean, on our end, as impact investor, when we started, and my partner Jean-Philippe actually, who initiated several companies here in Switzerland on the impact investing side in different stages and waves, what we've seen in the past is that, you had the developed world and the disadvantaged half of the world.
Yeah.
And this is technology is a threat to the developed world, because the food chains and the way we do and we invest and we operate is given, but it's not the way we should do it. So there is a disruption going on, and we need a lot of money even to implement the adoption of technology.
Yeah.
While on the other side, in the developing world, it's the biggest blessing, because finally, access and affordability of goods and services for the rural people, far away, the remote people, actually is given because technology resolves that. And that gives a totally new possibility also for future, underserved markets, how aid or development is seen, not the old way that I would say here is, teach the people how to fish, but really invest in their fishing business. Yeah.
Right.
So there's a huge potential going on. And that also, as these silos of industries, also in the financial industries, are being basically blurred. It's not torn off, but it's all getting mixed. Yeah. You see that also for example, we're based in Luxembourg, we're regulated, but also myself, Jean-Philippe, we're based in Geneva. In Geneva, you have the UN. In Geneva, you have the private banking. In Geneva, you have the big trading platforms. In Geneva, you have also several of the large corporates. There was no exchange going on between. Everybody was its own silo. And now suddenly we are in an inclusive, not exclusive world. That even for us as an asset manager, our old models, we had our own funds, and now there's pivoting into a platform of partnerships, public-private partnerships, multilaterals, big NGOs entering, wanting to double down in a sustainable way in investing, but also the large asset managers and the capital being pushed from a demand side, saying, I know you're investing my money with a return, but what do you do? Is it harming the world? Or is it helping the world? Is it resolving issues? Because thanks to the data, you have the information and the demand is there. So it's a very interesting moment in the financing industry also to rethink the way we do and have been doing investment in the past, but also a huge opportunity in terms of growth and underserved markets.
There is a huge opportunity, and there will continue to be opportunities. I'd like to address, well, what do you think disruption means? What do you think disruption means?
What I was about to say, because you're disruptive from a perspective of technology, but also from a perspective of business models. It's incredible what you're doing, actually. It's the combination of, the classic view on disruption is we invented some new technology, which but this is, your business is quite different. It's disruptive from both perspectives, and the combination is 1 + 1 is 3 effect, actually. And that's what I really very highly appreciate about your business.
What we learned, it wasn't meant to be. It's just happening as things are. Last 3 years, really. But again, what we learned is that disruption is needed when you need to push somebody away. We're in areas we don't need to push anybody.
Exactly.
So we can leapfrog. So the adoption of technology, of new models, we have these technology tsunamis in the past. Cell phone, which was probably a huge impact investor without even knowing it in Africa. Then the mobile money, it's going over. So fintech models, now distributed energy, not the energy distribution, and then you have basically connected households. Once you have internet connection, you have financing mechanisms, all data driven. You can really start IoT. It goes both ways: production, productivity. So it's a totally new way. And once these models, and we see some of our investees actually, who have tested their models. For example, in Africa recently, a fintech company is now going to Europe. Because the adoption is there.
Unexpected.
I mean, as we're focusing on the UN Sustainable Development Goals, which once they were out there and and makes life easier in terms of communication, what are you actually doing on the ground, and what are you measuring in terms of ESG, but also into sectors and themes. So all our funds have a specific theory of change. You want to use capital. Of course, we do the reporting in a regular way, all regulated in a similar way, but on the ground we're measuring, and also as we are investing more into digital, not only into the companies we invest, but also in terms of ourselves, the infrastructure, we have much more, the data real time.
Exactly, and you can move the data along with the asset, right? You can create a passport of the asset, whatever it is. Whether it's a project in an emerging market.
However, also we see a downside here, because this can also be very exciting, all the things you do, because as much as maybe we've seen in the news, the so-called post-truth, that the storytelling is gaining more power than the facts itself. Because, digital companies give you the facts, and you can say, okay, how many people in our theme, for example, have now access to electricity, households, which didn't have it before. How can they pay? And they also create a credit history with that, which is good. But then the storytelling, because that goes up.
How is this mindset affecting bottom line, affecting the profits? I'd like to know more about that. What do you think?
I would say in the past, an impact investor was niche market. And we were seen by the philanthropist as the disguised sharks. You say you do social, but you're not. It's all about money. And we were seen by the financial investors as the tree huggers. You say you do money, but it's all social. And again, I think everybody's taught wrong, because impact investing is big now. It's a huge way to go mainstream.
And it's profitable.
And there's no trade-off between one or the other.
Exactly.
Now, what I believe is interesting, and specifically in the digital mindset, is, I mean, of course, we all, we hear in Europe about mass migration. Not only hearing, we're seeing them coming, and a lot of people are afraid about that, of the, geopolitical and demographic change in a country, on one hand. On the other side, we have been focusing on maybe doing good business here and having as much export as we can. I think today, you can invest in a smallholder farmer in Africa. And by that, you have two effects. One, livelihood, because people don't want to go somewhere else unless they're forced to. And second thing is we're buying their products. We buy the coffee from there.
Yeah.
So if you know that the coffee comes, so there's a trade-off on both sides. So you have, by investing in impact investing, in conjunction, not giving trade, or let's say giving aid for free, but really protecting the vehicles where others can invest, you have an effect on both sides where you mitigate the mass migration, where you increase the food security, because we need, we want to buy products, we want to make sure that they're coming from other parts of the world, as well as making money, investing in. Our experience is clearly, as we focus on creating SMEs and backing entrepreneurs to be successful there, a wealth of a nation is defined by the amount of SMEs. Not by the big groups, but the amount of SMEs. So therefore, to invest in these, in emerging markets, digitally, safely, transparently, and protect it is a big change.
Yeah.
This is one in emerging markets, especially in microfinance.
Yeah.
You start with women first, just because the likelihood to get your money back, is higher.
Yeah.
And then also, if you look at some of the emerging countries like Rwanda or Togo, which are top on the list in the world in inequality, in even having, more than 50%, in whether it's the government or whether it's in the entrepreneurship or employees. It's a big shift. So I think there's a lot to learn, from the quote rich countries to the ones, just not too far away, specifically not digitally. So you get the information and you get stimulation of how to do things.
Yeah.
To that point, we're going to be at the World Economic Forum with the Digital Future Boardroom, and CNN Money Switzerland will be covering that as well. And our topic is going to be on family-friendly business codes and integrating that even more into our corporate governance, into our culture. Family-friendly being more inclusion of women, and how do we accomplish that? What are the nuts and bolts of that? So it may mean more flex time, things like that, and we're getting into that kind of space where companies are doing more virtually, and there are other things that we can do to raise that awareness of how we can empower women in the communities and make things more equal. So that's something that I think is very closely aligned with this discussion as well, because we're talking about sustainable business practice.
I believe a key focus is the shift from shareholder value to stakeholder value, and you broaden the scope already.
Exactly,
And if you from there go maybe like initiatives like B Corp, benefit corporations, for example, where there's, you want to make money, you need to grow, and you have to grow also your profits, otherwise it doesn't work. It's not sustainable, exactly. But on the other side, you look at benefits behind that. So I think remote teams, for example, as you're saying, distributed teams is a big portion in order to make it more easier, for women to participate and not having a child break and then restarting again. That's one of the topics. But I believe that stakeholder value is a key driver. And if you look at companies like the B Corps, the big ones like Unilever or Danone, they're all going in a direction, not just because they believe it's good for their, let's say, for the products they sell, but it's actually a demand from the customer side. So sustainability in the past was maybe perceived as something social, something to do good. I think today it has a value and a price, and it has a higher perceived value. So organic food, you can charge higher. Sustainable real estate, you can charge higher. Clean energy, you can charge higher. So those are things where the demand is there, the awareness of the customer is there, and that's thanks to the digital and information flow.
Absolutely. Aiming towards merging that short-term profit with long-term value creation. And we're seeing that we can have that. We're seeing that we need to be thinking about that long-term value creation, because that is where our profits are going to come from ultimately.
And I believe this is a good session, because You have representatives from the digital commerce. You have representatives from the regulated markets, public markets on it with going for sustainable. You have representatives from bringing partners together on themes and thematic to make a change. And of course, on our end, then to deploy the capital and put capital together to trigger change. So I think that's the exciting part of being in starting here an inclusive area, no longer an exclusive one.
Absolutely. It's been a very, very dynamic discussion. Thank you so much for being here, and I really look forward to the exciting partnerships that we're going to forge afterwards.